In June, the ECB was the very first central bank to introduce negative interest rates. Draghi said today that rates will stay at this level for an extended time. I'm joined on the line by ING's chief Eurozone economist, Peter Vanden Houte. First of all, Peter, what did you think about Draghi's tone today and, of course, his attitude towards growth and monetary policy?
Well, basically, Draghi tried not to sound too pessimistic. As a matter of fact, the growth assessment remained broadly unchanged, so the ECB still expects a moderate recovery, though now they added the word uneven to it, to the assessment, given the fact that Italy is again into recession. But all in all, the ECB tries to signal also the fact that there have been some positive developments. Look, for example, at the credit cycle there, it seems that banks have started to loosen their credit standards and that there is more demand for credit. So all in all, the ECB remains confident that its scenario of a gradual recovery will still apply, and therefore Draghi, basically said that the measure taken up till now would be sufficient to foster this recovery.
Draghi said inflation will eventually go back to 2%. But Peter, when do you think this could actually happen? And do you think we will see an uneven inflation recovery among the euro area countries, where some countries will have much higher inflation than others?
Well, for starters, I don't see inflation returning that rapidly to the 2% level. So we could be talking 2017, perhaps even 2018, given the fact that the recovery remains very weak and that structural reform in several countries is pushing down inflation rates. So the 2% are still very far away. Now, ideally, we would like to have a higher inflation in Germany, because this would allow other countries to restore competitiveness without effectively falling into deflation. The trouble is that some people are indeed advocating more inflation in Germany. Even the Bundesbank was saying that they would support higher wage agreements in Germany, but the bottom line is that you don't see that much appetite for higher inflation in Germany. So even though it would be better for the Eurozone if Germany at a higher inflation rate, I don't see it happening in the near future, and that's basically the reasons why I expect that we will not see a return to the 2% inflation level until 2017 or 2018.
And Peter, all week we've been hearing about export bans in Russia. Now, Draghi addressed the geopolitical risks and said the ECB is starting to assess the impact of sanctions. Now, what are your biggest concerns in terms of the impact this could actually have on growth?
Yeah, well, if you look at the direct impact of the sanctions, the sectors affected by the trade sanctions, then all in all, it remains limited given the weight of the sector, given the fact that exports to Russia aren't that big. So the direct impact is probably something which is not that hard to swallow. But I think the indirect impact is much more important. What we have seen in the past when such type of conflict is happening is that the impact on confidence and on financial markets might be much bigger, and that by itself could have a much bigger growth impact. If you know that, for example, now much of the Eurozone recovery is due to a higher confidence, both at the consumer and at the business level, then it also means that everything that hurts this confidence could hurt the recovery, and that's my main fear. If we would see a further escalation of this geopolitical tension, that we would see a financial market reaction and an impact on confidence, and that by itself could drag growth rates down in the second half of this year.
Draghi said the TLTRO program is happening at the right time, and he expects a sizable pickup of TLTROs. Now, Peter, do you expect something similar?
Well, yeah. For the time being, it's true that there have been some surveys, and especially in peripheral countries, banks have announced that they would indeed take up some of those TLTROs. Now, having said this, these TLTROs are specifically designed to foster credit growth, but then there has to be credit demand. And it's true that in the latest bank lending survey, banks have been signaling some upturn of demand from non-financial companies. But again, this pretty much also depends upon the confidence in the economic outlook, and if this economic outlook would worsen because of the geopolitical tensions, then I think that the companies will refrain from investing right now, and therefore credit demand will also be very weak. So at the end of the day, the success of the TLTRO also pretty much depends upon business confidence, and therefore it's of utmost importance that this business confidence isn't hurt by further geopolitical tensions.
Peter, thank you very much for your time today. Well, viewers, do stay tuned as we have plenty more heading your way. Goodbye for now.